Hi guys, this is Mark from the Pattern Trader. It's Sunday, August 16th, and we're just moments away from a new weekly trading session. Before we get into the new week session, I wanted to go over a couple of interesting setups that I'm looking at that I think present great opportunities going forward. They're also going to be very instructive for me to show you my methodologies and how we apply our trading strategies in different market conditions. We're looking at the euro versus the US dollar. The euro versus the US dollar, for the most part, has been a sideways trading affair for the last couple months. But we think that it's nearing a conclusion where it will resolve itself in a major direction that we'll be able to take advantage of very quickly. The other trade we're looking at is the euro versus the Australian dollar. And while the euro versus the Australian dollar has been moving in an upward direction for the last several months, we're seeing the emergence of a double top price pattern right here. So we think we're looking at something that could be marking the end of the upward march of the euro versus the Australian dollar, and at the very least we could get a good price break in the next week or so to take advantage of. And then in the third currency pair we're looking at is the US dollar versus the Canadian dollar right here, and this has been a more conventional uptrend. And we'll dig into each one of these pairs individually to show you how we take advantage of each of these market conditions. So again, in the euro versus the US dollar, we have a sideways trending market. The euro versus the Australian dollar, we have a market that appears to be turning from bullish to bearish. And in the dollar versus the Canadian, we have a straightforward trending market. So let me address each one of these markets individually. And the first market I'm going to look at is the euro versus the US dollar. And my primary guiding decisions in the last couple months have been driven by my observance of the double bottom price pattern that emerged in the April March timeframe at or around the 105 price level in the euro versus the US dollar. Remember that the euro versus the US dollar has been a prolific downtrend for the past year or so, coming all the way from the 138 price area all the way to 105 in March. It double bottomed at the 105 level again in April, and we followed a lot of that price action to the upside. So every time we met some support, I was driven to buy this, again guided by the double bottom price action in March and April. But recently my thinking has begun to change, and I think that the more prominent and driving force will be the double top right here at or around the 114.5 price level in the euro. If we draw this out, you'll see that this really has the look of a big double top over here, and this looks to be the next driving force in the euro. So even though this has been a sideways market, when prices refuse to go upwards after making a good move last week in Wednesday and Thursday, Friday time frame, we didn't see any advancement in the euro. And in fact, we had these two inside day bars both on Thursday and Friday, which suggests that the market is coiling for another move. And I think that the next major move will be to the downside. If we don't make any further price advance on Thursday and Friday, you'll also have the emergence of what appears to be a descending wedge price pattern. So, which will be confirmed at or near the 108 level. So we're going to take a shot and put a sell stop under the lows of Friday, which was around the 111 area. We're going to put a sell stop right here at the 110.98 area. I'll just indicate it here. So what we like to do is have the market action confirm our analysis. The market did just open now 111.14 at or near Friday's close. We want to be a seller of this market under the 111 area. So that's for the euro versus the US dollar. In this chart, we're looking at the euro versus the Australian dollar, which has been pretty much in an uptrend from the 136 area all the way to the 153 area for the last 6 months. But recently, in the last week or so, I've seen the emergence of some very big key reversal price patterns right here, which also indicate a double top. So we made a new monthly high on Wednesday, only to see it reverse in the opposite direction. We now have a coiling effect of a couple of inside day bars on Thursday, Friday, which indicates that a breakdown under the low at 150.50 on Friday, this market would likely head lower. So we're going to put our sell stop right here at 150.47, which, if confirmed, should see the market go down to at least the 148 area, which would then confirm this entire thing as a double top. Just by way of comparison, you could say, hey, Mark, look, we saw the same couple of things here where we had two key reversals, look like a double top in this area. What's the difference between what we're looking at in this week's session versus a couple weeks ago? And I'll also only say that when I look at these price patterns, I look at the price action that follows. The price action should support our analysis. And this is an art, it's not a science. And so when we see these patterns, we also want to see the price action confirm our analysis. So if this double top was indeed good, the price action should have followed that way. And instead, the market prices consolidated and the prices actually went in the opposite direction, which didn't confirm that as a double top there. In the same circumstance, if prices were to go back up, it would invalidate our assessment of this as a double top, and it will only be confirmed actually when this market hits around the 148 price area, right around this level right here, which would be about the neckline for this. So this will only be confirmed as a double top if and when it penetrates about the 148, 147 area. But I didn't get to buy my Ferraris by waiting. I'm very good and adept at seeing things very early and jumping on them. Conversely, I'll put my stop loss very close so that if I'm wrong, I'm going to get out with an acceptable risk. But if we're right, I think we could get a quick break out of this euro versus the Australian dollar. So I advise you to tune in tomorrow to see how we did on this trade. The last market we're focusing on here is the US dollar versus the Canadian dollar, which has been in a pretty pronounced uptrend from the 119 area all the way to the 132 area, which it's currently at or near. This is a pretty conventional uptrend each week, new weekly highs. And the way we look to get advantage and take advantage of uptrends is through either key reversals in the direction of the trend or an inside day bar. A key reversal will be where the market's made a new low and recovers and closes in the opposite direction in the direction of the trend. In this case, an upward trend. In the case of a downward trend, we would look for downward key reversals where we made a new high and closed on the low in the direction of the downtrend. So you can see evidence of a couple key directions in the direction of the trend that when you jump on these things, typically the ensuing price action thereafter is very, very profitable. Conversely, we also look at inside day bars, and when we penetrate above those levels, typically that is also a good area to get in when you're in an uptrending environment. And so on Friday, we had another inside day bar that closed around the 130.75 area. We're looking to put a buy stop in the US dollar versus the Canadian dollar at 130.80 to take, 130.75 to take advantage of this uptrending market. So again, this is Mark for the Pattern Trader. If you'd like to follow our trades for the next 2 weeks free trial, please click on the link below. And we look forward to seeing how these trades follow through into tomorrow's price action. So until tomorrow, I look forward to seeing you then, and have a healthy and prosperous trading day.